All right, all right. Good morning, good morning. How are you guys today? We are ready to get rocking and rolling. We have had a lot of updates to the software over the last couple of days and changed a lot of things around. So let's see if we can't make this thing work for us. It's a good Monday morning. Tonight we have class at the university. So for those of you who are interested in joining us at the university, I'd love to have you there. We're going to start teaching the university class this week is going to be options. So we're going to be spending a little bit of time doing options here in the lab, and everybody's welcome to come and join us for the lab and learn a little bit about options. Today we're going to go through and we're going to update our UBI calculator, not our our calculator. I guess you call it our calculator, our portfolio, our universal basic income portfolio. And we got to analyze the markets. We haven't taken a good look at the markets lately, and we need to do that here in the stock market. So we're going to focus on the stock market today, and we're going to look at these different markets that are in our UBI, our universal basic income portfolio. All right. We got a lot of stocks here that are fun and interesting to look at, but we're going to focus in on the core today. And if you guys want to stick around for that, then let's get started. All right. First thing I want to do is I want to ask you if you have any stocks in your portfolio that you would like me to look at. So keep that in mind as well. And you can put those in the comments and if we have time, we'll go look at your stocks as well. So the first thing I want to do though is I want to go over and look at the news, because that's the first thing we always got to do, right? We always got to go look at the news. All right, economic calendar. Today is Monday, March 17th. We have it set up for Impact 2. 5:30 this morning, retail sales came in. Forecast was 0.5, consensus was 0.6. Previous was down 1.2, but it came in at 0.2. So not as high as the forecast, not as high as the consensus, but better than the previous. So retail sales went up a little bit. Now we do have consumer confidence is really high. So highest that it's ever been. It's like breaking records high. Um, More people are saying that the federal government is turning around and doing the things the right way than ever before. So that's like since records have been being kept, the government is actually, which isn't very high actually, but it's still better than ever. All right. So more people think that the country is turning in the right direction than ever before. So I think that in spite of the rhetoric of the mainstream media, all the small group of people get a lot of attention. It's just a small group of paid people who are doing all the protesting, and poor Elon Musk is taking the brunt of it. He just saved. He's an American national hero. He's a world hero. He went up there and sent those rockets of his. NASA and Boeing have been doing these rockets forever, and Elon Musk, he jumps in there, and he's the one that they call on to go save the astronauts. So you got to give the guy credit. And here he is trying to help America cut the waste, cut the fraud out of the federal government. And most Americans love it. But the ones who are losing the money, the ones that he's taking the money away from, are screaming bloody murder. Small group of people who are taking advantage of the rest of us, nice tax paying folks. And so he's getting a lot of grief for that. But we're going to go take a look at his stock. We're going to go look at Tesla and see if there's any buying opportunities out in there. All right. You've all heard the term buy when there's blood in the street. Well, poor Elon and poor Tesla, a little bit of blood in the street right now. So we're going to go take a look at that and see if there's not a buying opportunity. All right. For us, because this too shall pass. All right. This too shall pass. So we're going to get in there and take a look at that. So we got retail sales month over month, 0.3 up 1. So retail sales month over month is doing well. Retail sales not including automobiles, 0.2, it's up 0.3. So the forecast is 0.2 up 3. And business inventories, 0.2 to 0.3. Now, I don't know necessarily, this is kind of one of those things where you're like, well, business inventories are up. Does that mean more inventory is not being sold, or does that mean they're manufacturing more and putting more into the inventory in anticipation that we're going to get more sales? I don't know. So we're going to come in here, NAHB housing market. The housing market forecast was 44. We're at 39. So housing market index, not as good as we were hoping for, not as good as the previous consensus, but there you have it. All right. If you're looking for a new house, believe it or not, now might be a good time to do it. The market's kind of got lots of houses, and things are starting to turn around. We're at that time frame where I think we're going to see some turnaround stuff, and then people are going to be more optimistic, and houses will start to move again. So buy them when they're cheap. Not that they're cheap. Houses are extremely expensive right now. Ugh, I'm looking at a house I got my eye on, and wow, they want a lot of money for it. All right, let's come in here. Take a look. Let me get me down here out of the way. And the first thing I want to do is I just want to go to the S&P 500. Start with the S&P because I don't want to. We're going to go look at all the other individual stocks, and every one of the stocks looks like it's in a great buying situation. All right. Everything looks like buy, 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 scream and buy. Everything is buy, buy, buy right now. But I want to put the brakes on that just a little. Not that we can't go put some money into these markets. We can. But I want to put the brakes on just a little bit here in the beginning before we get too excited about spending all our money. All right. Because the daily chart even looks great here. I mean, we're coming in here and we're going to look at the daily chart. And if you just look myopically at the daily chart all the time, you don't take into consideration the longer term view of things and what's going on. I mean, this thing is coming down and it's dipped way down here. In fact, we have to go all the way down to the 78.6 Fibonacci number to see that this thing, the probabilities, has reached way down past the delta cone of probability. So this is your one standard deviation, and we've gone outside. We've swung past the one standard deviation to the upside, then we swing past it all the way down here. It acts like a rubber band, wants to pull it back up, right? So that's what we're anticipating. We're anticipating a pull back up on that rubber band. And that's what's getting everybody excited. They think, oh, this drop is over. We're going to start seeing markets rally. They're all putting their money in. The problem is, and I hate to be the bearer of bad news, and I don't know if I am the bearer of bad news or if I'm just, pessimist. This thing is generally an ABC pattern. So it generally comes back up, hits that blue light right there in dead center, that 50%, and flushes one more time. All right. So that is an ABC top formation. It's been going kind of sideways in here. We got this little break, and that was the first flush. And then it pull back and then flush again. Now, will it come all the way down and break and come down? Nobody knows, right? We don't know. The big boys, the big, Black Rocks and those guys, we don't know how they're going to push the markets around. Now, they've got a lot of sway in what these markets do. And, it's their formula that we're following against. What we try to do is we try to reverse engineer what those big boys are doing and what they're thinking. And we know their strategy. We know it from time past. We know it by looking at historical charts. And not only that, we know it because I went to the Chicago Board of Trade and sat like a fly on the wall on the back of the back row and listened to them teach the strategy to new, young, upcoming market analysts and traders. And so I know that this is how they do it. All right. We have some insider knowledge on their secret strategies. What are their secret strategies? Well, it's not so secret. Buy low, sell high. I mean, that's their secret strategy. Most of us don't do that. We buy high and sell higher. And that's how we get ourselves in trouble, right? We've talked about this in the past, building upside down pyramids. We don't want to build upside down pyramids. That's not what the big boys do. They build upside right pyramids. They buy low and then they sell high. They sell out as the market goes up. What do? We buy in as the market goes up. We don't buy in as the market goes down. And that's what this indicator right here is trying to tell us right here. The chalk and money flow is an indicator that tells you when the big banks and hedge funds, the big guys that are in control of the markets, are buying. We got a little buying going on right in here, right? Got a little buying going in here, but this is where they're selling. They're selling right in here. Well, what are we doing? We're small speculators and we're buying all the way up those green trends, right? Why are they selling? Well, because they bought down here. And then they sell out as the market goes up. So they buy low and they sell all the way up the trend. Who are they selling to? They're selling to us as retail traders, because for every buyer, there's got to be a seller, right? You hear me say this in almost every class that we talk about the stock market, because that's the way the nature of the beast works and the way they take our money. That I tell you all the time, they have all the money in the world. They can make these markets pretty much move and bounce and do what they want. So they have all the money in the world. The only money they don't have is what's in your pocket, and they want that too. And so it's not like they're being mean or cruel. It's just they've told you a million times over, buy low, sell high. But we won't do it. We refuse to buy low, sell high. We like to buy high and sell higher, and that's the problem is that we won't sell higher. Retail traders, we buy and we never sell until we're losing money. That's the only time we sell. Oh, I'm losing money, sell. Never take profits. That's one of the worst things, the worst habits of retail traders in the whole world is that we won't sell. We won't take our profits. We only sell when we're in losses, and we wait until we're in the loss until we sell. And we always sell in losses. So we're always losing money. So we got to learn from our mistakes, and we got to follow what the big boys teach us and tell us. Buy low, sell high. You got to buy down here in these when there's blood in the street. Nobody wants to buy right now. Why? Because the market's not going up. But who's buying? It's the big banks and hedge funds are buying right now. Okay. Now I don't know how much they're buying. They're just buying a little bit right here. This is the S&P 500. We're just getting into some buying mode. But this is my concern. I'm afraid they'll buy a little bit just to get us all in there because that's what they like to do, right? So this is also sellers coming down here, and they're buying to get out of their short positions. So they have to buy to get out of their short positions, and that makes the market pop a little bit. And once they've got out of their short positions, there's no more buyers, and then the market flushes and goes down one more time. And that is where, the big boys come in and drag us small speculators, and that's how they get all of our money, because we're like, a little bit of relief, and then it turns and we start to buy back in again, thinking that this is going to be the turnaround, and then it flushes one more time, and we sell out everything we've got to them, and then that's where they turn it around and it starts to go back up again. Now they'll usually do that 2 times on the downside and 3 times to the upside. That's called an Elliott wave. All right, it's a general pattern that you find in the markets over and over and over again. They teach this on a daily basis at the Chicago Board of Trade to new traders. All right, to new individuals coming through their courses out there. And so this is something that you need to understand. And what we're trying to do is we're trying to reverse engineer what BlackRock, Vanguard, and State Street are doing. And that's the whole idea of technical analysis. Come in here and reverse engineer what's going on in the markets. And so that's why we use technical analysis. But we have to also take into consideration where the buying and the selling is going on so that we can buy when they're buying, we can sell when they're selling. And we need to do that and not play the reverse, which is buy all the way up the green trend. We should need to be selling up the green trend. But as long as we're aware, we can buy up the green trend, and we all like to buy a rising market, right? So the banks aren't doing that. They're selling up that green trend. They've already bought. They've already bought down on the way down. They buy all this down in here, right? So the reason I'm saying that I'm still a little bit skeptical, even though all the daily charts on all these markets are looking like, let's get in, let's buy into these things. And we can put some in. Let's go look at the weekly charts, and let's go look at the monthly charts. Now, this is the weekly chart for the S&P 500. And I want to do a little analysis and mention to you how far markets have a tendency to pull back down when they pull down. So let's come in and measure this on a weekly chart. So we're going to come in here. Let's just start back here. There's one. Here's another one. Here's another one. Right? Here's another one. Here's another little pullback. See these little pullbacks, You can see that one's about 5%. This one's about 8%. Sorry, I'm losing my voice. Let me drink some tea. This one's about 5.5%. This one's 10%. That was a big move right there. This is a 6%. This is what is that one? About 7%, 8%. That one was a big one right there. That was a 20% move. So you can see how far it likes to go. And how far has this one gone? Well, if we come in here and draw our little thing in there, it's about 10%. Now this one back here was 20. This one was 10.95. So this one has fallen about the same as that one, right? And we haven't got this one. You can see right here is an important one because it got back into the accumulation stage for the large speculators. And then they sold out all up in here, right? This is them selling all out. And now they're out. 3 drives, right? There's drive 1, drive 2, drive 3. Drive 1, drive 2, drive 3. You can see it in the indicators, all right? Because that's what these indicators are designed to do. Now, the MACD is a moving average convergence divergence. It's the I like to look for the color changeover. This one doesn't actually have a color changeover. I wonder if we could go in and ask the mathematicians to create this one as a color changeover. But the MACD does a good job of that, telling us where the markets are turning from at the peaks up in here from green to red. Now this is the retail side. So this is the buy, sell, take your profits, right? Buy, sell, take your profits. Buy, sell, take your profits on the 3-drive pattern. We got another one right in here. You can see this one, buy, sell right here. And see the turnover on the MACD? You see the color change over. And of course, the bulls and bears is what's turning the price bars red, yellow, and green up here. I've got that laid over with the blue lights. And that's kind of a combination tool that's seemed to work best for me. Now, of course, I like Fibonacci. We got to always look at Fibonacci because that's the delta cone of probability. We go from the low to the high. And then the delta cone of probability is right in here. All right. So one standard deviation says that the market should come back into this region. Now, nobody wants to see the market come back that far, but on a weekly chart, that's the downside that this thing is pulling to. We've had our 3-drive runs. That's what the big banks like to do. They like to do 3. So we're reverse engineering what they like to do. Does it mean they're going to make it go all the way back down into that region there? Are they going to let it flush all the way down in there and start buying down in here and let the market suffer that much? They might. They might. You know, we got a lot of politics going on. And you have to realize that Wall Street is primarily, they're left leaning. They don't like Donald Trump very much. He's messing things up. They're international world banks. They're international world companies, international globalists, right? And Trump is not. He's not a globalist. Trump he's a nationalist, right? He wants America first. These big banks and hedge funds are all about taking all your money. And they want to do that, but they're also global organizations. They've got money coming in from all around the world. And so they don't think, myopically about America like we do. They think about the whole world economics because that's where their money is. They've got all America's world money. They don't want to go to the world and get all the world's money. Okay. So they think in a different way than we do. But you have to take that into consideration that they don't really like what Trump's doing. And so sometimes they punish him. And if you remember the very first time he got elected, they punished him hard. The market flush went all the way down, sent him a signal of what that they did not like what he was doing. And so it took them a bit to turn around, decide they wanted to start making money, and they started making money on the rally. But they like to punish people that they don't like, and they do that financially. And it makes Trump look good to have nice rallies in the stock market. So they don't want to help him. They don't want to make him look good. And they certainly didn't want him to win the election, which is why we had, again, such big, massive moves prior to the election. They wanted to keep the puppet, the little puppet in there, something that they could control and sign a whole bunch of laws and with the auto pan, right? So you heard that the other day, right? Like he signed like 1,000 papers just before he left office with the auto pen. It wasn't even him. He didn't even do it. So Biden signed all these executive orders with an auto pen. Who signs executive orders with an auto pen? Give me a break. All right. Anyway, let's come in here and look at the monthly chart. So this is the monthly S&P. And this is the one that's making me scratch the back of my neck. All right. This is the one I don't like to see, because this is the one that says we got a lot of downside potential. And I'm going to draw in here the Fibonacci bow tie. And we all know what the bow tie is because you've been here before. The bow tie says this thing's going to come back to here. And that's tie the bow tie off. And if we buy the previous bow tie was here, 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 and here. And if you do the previous bow tie, it was a little one right in here, but it was the one that was Corona, right? That was the Corona bow tie. So it flushed way down, and then that was our tie off on that bow tie. And we got a little marker in here, and the bow tie started to be a little bit less aggressive in here, but we had a bow tie right in here. It came all the way up there, and then it flushed down, and then back to here. And it didn't quite come back to the previous high, but you can see all the little bow ties in here. And that's what that market is. It makes that 2 steps forward, 1 step back, 2 steps forward, 1 step back, 2 steps forward, 1 step back. Well, this 2 steps forward has been boosted with $7 trillion of credit card spending, plus AI got in there and boosted that. Is the AI bubble popping? I kind of think it is. I mean, it doesn't mean that AI is not still moving forward. It certainly is, and it's moving forward at breakneck speeds. I mean, it is amazing stuff. Oh my gosh, it's so amazing. I've been using Grok lately, which is Elon's version of the AI system, and man, it's smart. Holy cow, that bugger is a smart bugger. Really just amazing. But it's still got a long ways to go, in my opinion. And so it's not ready to take over the world yet, but it's still got a long ways to go. But it's really cool. And yeah, it's really cool. I could show you some really neat stuff. That'd be another class, but we could go do that, play with that. But right now, this is where our bow tie is saying this market's going on a monthly basis. Is it going to pull all the way back to there? Nobody knows. The thing is that we've got, if you go back and look again, if we do let's delete all these drawing tools and we take our dollar calculator and we just do some of these things. Okay. That was 20%. How big was this move here? That was 16%. Look at this move here. And we never even heard anything about that one, 27%. That was a move during the Biden administration, and nobody even squawked a word. I mean, this right here, this was 35%, and that was Corona. Shut down the whole freaking world economy, right? And it went down. That was a 35% pullback. This here was a 27% pullback. Probably don't even have it. Yeah, about 27, 48, 27% pullback. Nobody said a word. Oh, it's not a big deal. Okay. It depends on who's in office, right? Look at these little pullbacks in here. So it's not that we can't see if you scale this thing. What is this pullback right here? 21%. This pullback here, 17%. And now this was a big nasty one. That was the .com collapse, wasn't it? That was George Bush was this one. That was after 9/11 and everything, I think. And then that's when Obama got put in the office right here. So this was 57%. That was a nasty move. So if we come in here and we look at these things, 16%, 20%, that big one, big nasty one right there, 35% on Corona, big nasty one, 27% right there. Then they did all that quantitative easing and spent all those trillions of dollars to bring that back up. But, where are we at right now? Right now, we're at 10%. So, I mean, this one here was 27%. If you put the 27% in there, where does that bring us back to? If we had another 27%, another one just like that, where does that bring you back to? It brings you right back to that bow tie. Right back dead center of the bow tie, which is what I've been talking about, right? Right back dead center of that bow tie, just like that. That's what I'm worried about. That's why I scratch the back of my neck and I'm like, that's where that thing's going. Is it? I don't know. It could just be one of these small ones and we could see it rally, come back and hit those blue lights. That means even if it hits the blue lights, still got some additional downside potential. Look at this. It's barely got one bar on the pullback on the monthly chart. That's not usual. Have we got more to go? Possibly. I mean, usually, look at this one. 1, 2, 3, 4. Look at this one back here. 1, 2. And then it rallied and then went 1, 2 again. Back here. 1, 2, 3, 4. This one here. 1, 2, 3. That one. Don't want to talk about that one. So do we have some more downside potential? Yeah, I'm afraid so. Weeklies tell us that this is the, we're just begun the drop here. But if you come in and look at the dailies look like they're ready to go. But this one here is the S&P, and to me, it looks like it's coming down. It's going to go up, and it's going to flush again. But is it? I don't know. Could we buy some right here and be happy and have the market take off and go to the moon? Yeah, could. But all signs are saying it's not going to do that. I don't know. Let's go in and look at some of our individual stocks, and then we're going to go over and update our portfolio. Okay, we'll do that. We got to update our portfolio because we got paid, and we want to put that money into our portfolio. So we're going to do that too. But let's go look at some of these. So this is Coin. Coin is one of the ones that we like to trade in our portfolio, in our UBI portfolio, right? Universal Basic Income portfolio, because it has a big dividend. And it gets the dividend through CONY, which is this one here. And if you look at CONY, hey, this is a turnaround point. This is everything on the daily chart on this market says buy, buy, buy. Should we? I don't know. I don't know, because we got that overall longer term market is saying, you know, don't do it. So we got two beautiful, I mean, a nice, big, beautiful drawdown in this thing. And then you got, look at the big, it's telling us the big banks are buying like crazy. We're kind of waiting for the turnaround here. I want a green bar at this point here, right in here. I want to see everything turn around on this right here. This is Coney. But if we look at coin, which is the underlying, still kind of this is the actual stock. So we got the break there, right? We come down with this is the top. So this is drive one. This is the counter trend, and we're at the bottom of drive two. And we're down here where if this was any other market, I'd be yelling and screaming to get in. Buy, buy, buy. This is a great opportunity to get into this market. Let's go, let's go, let's go. Let's rally, rally, rally. Because this thing is a big buy here. Look at that accumulation. We're getting a turnaround here. As soon as that thing gives us a green bar, we're going to go all in, back the truck up. But with that cautious S&P 500, I'm hesitant to say that, because on the long-term trend, the markets are still looking like they have a lot of downside potential. But here, we'd be screaming buy, buy, buy. What are you going to do? I don't know. I don't know if you want to buy right here. This is just yelling and screaming buy, 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 buy. We're at the bottom of a second drive. Can it go to third? Absolutely, it can go to three. As we always say, this is up here. This is like buying, sitting with a pair of twos, right? Not the best hand, and those usually fail, and it did. But this one here is like sitting on a 17. You know, you kind of want to hit on a 17, right? You want to hit on a 17. You're like, hey, I think I'll hit on a 17, because that's usually a good hand. But we got the third one coming down because we're waiting for that jack and a king down here, right? Jack and kings on the third one. And we never get double aces, not in the stock market. But, a 10, 20 is pretty good. Jack and the king down here on the third drive down. At the bottom of the third drive, that market, the real high probability is going to turn around. But it's a pretty good probability it's going to turn around right here too. That's a good probability. Elliott waves tell us 3 drives up, 2 drives down, sideways, back up again, right? That's where we go into those Darvis boxes. So a Darvis box bottom is generally 2 drives back down. That's how we get a continuation of the uptrend. With 3 drives up, 2 drives down on the longer term basis is 1 drive up, 2 steps back, 2 steps forward, 1 step back. And then that's the longer trend. So, but our longer term trends are still telling us we're very bearish. So that's why I'm a little hesitant to yell at everybody to jump in, get back your truck up, sell your house, sell your farm, because we got a lot of downside potential on those long-term charts. Let's come in and look at gold. This is gold. Look at the 5-minute chart. It rallied at the open, then it flushed. It's getting ready to go up again. It looks like it's trying to break and rally one more time. But gold looks like to me it had a little run here, broke 1, 2, 3, 4. We usually get a little pullback and then a rally again. We'll see. We'll have to wait and see on this one. I think we got some upside potential on gold. As long as we're going down in the S&P, gold's going to go up, right? Of course, gold's got a lot of other things going for it right now. I don't think you're going to ever see inside Fort Knox, no matter what Trump and Elon Musk want to do. I think both Trump and Elon realize that they better not do that. You've heard the rhetoric on that's gone way down. Because what if they do go in there and there's no gold? What if they really do find out there's no gold in there? How many of you believe that the U.S. economy is built on a pair of stilts? That would be the stilts that we're standing on, ready to crush if there's not any gold in there. U.S. dollar, everything all depends on that gold being in there. So we're going to come in here, look at Mags. Mags is another really good one that was screaming, hey, let's buy this baby. We're in this 2 drives down, right? Look at this, Fibonacci top formation, and it comes in here. And man, they don't get much better than that. We're right down at the 200% level, right at the bottom of the Delta Kona probability, 3 drive pattern. Everything here says buy, buy, buy. Screaming buy, 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 buy. This is all of your, And I mean, even in the indicators, look at the indicators, all green, 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 green. They're buying, buying, buying. They're accumulating, and it's starting to go back up. Look at the MACD. Doesn't get any perfecter. Any perfecter? Is that a word? Any perfecter. Why in the heck can I talk today? Hold on a second. So any more perfecter than that, because man, that is about as perfect as it gets. Look at that, how beautiful that MACD is. There's your green signal right there. If you wanted to buy early, get in now, now, now. But this is a 17 again. It could flush and go down to a king and a jack, right? I mean, usually right here we'd be saying load up a little bit, get a little in there because that's a good turnaround spot. But it might just come up and go back down, and we'd have to do the whole thing over here and dollar cost average in and ride down through another drop. We do have this other line down here in the sand, which is right there. So take it for what it's worth. You want to put a little in right there? You know, you're going to get your dividends if you put it into the now this is mags. Mags doesn't pay a dividend. Let's go over and look. I'll show you. If we come over here, here, and we go to here, YMAG is the one that pays the dividend. All right. So you can see right down here, it's paying dividends out at a rate of 14 cents per share every week. 15 cents, 17 cents, 13 cents, and a share is only $15. That's pretty good return. You know, there's others that are better, but this is, and look at this. This is your MFI, money flow right here. This is your RSI. See that these are just like screaming, buy me, buy me, buy me. And we come in here, MAGS, MAGS this is the one that we're looking over there. The dividends looks like it gave a dividend 42 cents per share, but shares are 47 cents. But that's, look, one dividend in like all year. That's not really worth shouting, writing home to mama about. But look at this. I mean, you don't see this very often. You don't see this very often. It's not going to let me draw down there. That's a boundary. Can't draw down there in this tool. All right, but that's the MFI way down there. Everything's screaming buy, 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 buy. But are we going to buy this thing? I don't know. You know, this is the big tech stuff. I've already got a lot of money in here. I'm getting my dividends. It's just whether I should put more in. I got a bunch of money sitting on the sidelines waiting to go into the market, and I just can't decide whether to put some in. I might put a little in. I don't know. It's down here at the 200 period moving average. Everything says buy except for that long-term chart. That long-term chart says keep your money dry. Keep your powder dry, buddy. Boy, I want to put my money in here. I don't want to put in this one. This one's not a bad one. This is growth, right? If you want growth, this is a good one. YMAG is the dividends. If you like monthly income, this is the monthly income. Pays a good dividend. Every week you get a check. Go take your honey out for dinner on it. It's a good one. Let's see. That's the game, man. Let's go to the next one. Let's go to MSFO. This is Microsoft. Now, Microsoft has been suffering. MSFO is MSFT, right? Now, Microsoft down here is yelling and screaming, buy me, buy me, buy me. Buy me, buy me, buy me. Look at that. Right down to 161.8, just like a train on rails. So where's our pair of twos? Right here. All right. Where's our 17? Well, it kind of broke right there. You almost want to call that the 17, don't you? It's trying to bottom out in here. Certainly trying to bottom out with this. But right in here, man, this thing's turning around. That's you're sitting on a pair of 7. You're sitting on a 17 at the blackjack table. Do you want to hit? That's the question. Because the third drive down, take this drive tool, would be a little bounce up into this region here somewhere. You get your little rally, and then come back down into this region here. And you get your third drive down. When we get the third drive down, that's where we're going to say we're going to have a jack and a king. Jack and a queen. I don't care, whichever you prefer. But one of them's a jack. All right. One of them's a jack. Could be a jack and a 10. That's okay too. We'll take it. Nonetheless, that's not there. This is a 17 up here. But that's a good place to put some money in on a normal market without a overheated long-term weekly, monthly chart, which we have very much overheated. What's going to happen? Nobody knows. We have to see how the politics play out. We have to see how BlackRock, Vanguard, State Street start talking about the markets. Now, I will tell you that, what's his name? President of Chase, Jamie Dimon. Now, he's a big player too. He's not as big as BlackRock. He's not as big as Vanguard. He's not as big as State Street, but he's a pretty big player. Chase Bank's pretty big player. I have an account with Chase. And you know what? I have to admit it. I like that bank. They've really been good to me. I have bank accounts with mostly all my money's with local banks. I like local banks. I have lots of local bank accounts, but I do have one with Chase. I want one of those big international banks as well, and I have that, and it's with Chase. And good bank, really good bank, been good to me. And so Jamie Dimon said he likes what Trump's doing and what Elon Musk is doing. So he's all on board. So does that mean that maybe because Jamie Dimon with Chase Bank is all on board with what Trump and Elon are doing, maybe, just maybe, BlackRock's not so against it either? You don't know. I mean, the things I've heard in BlackRock is that they hate Trump, but those are rumors. Nobody really knows. They kind of keep their cards held really close to their chest. They don't wave them around. Same with Vanguard. Same with State Street. Don't ever hear about those guys. They don't talk. Those guys are really good at keeping secrets. So this is Microsoft, and they're screaming buy right here too. Buy, buy, buy. If you want to buy the MSFT version, go for it. MSFO is the dividend version. And you don't really, I mean, you're looking at this and you're like, oh, look at the buy signals on this. It's not so important. This over here is not really, the trends of this market, not really so important. Yes, you buy this one, but you buy this one based on the movement of this one. All right. Because this is trading options. This is the options bucket for this market. So you're going to buy this one. Yes, this is one you're going to put your money into, but you don't really pay attention to this one as far as the trend and where to buy. I mean, obviously you want to buy when it's green, but that's the point. But you do that based on the Microsoft version, because Microsoft is really going to control that way more than what the trends are over on MSFO. MSFO is just where you put your money, but then you watch the Microsoft to know when to guard your money. So this is very much saying buy, buy, buy. If you want to put a little bit of money into Microsoft or MSFO right now and start picking up some dividends, I can't tell you not to, because everything's screaming do it. Buy, buy, buy. Put your money in there. Start getting some dividends. Will it go down some more? Yeah. You know what? Your shares might go down a little bit more, but at least you're getting some dividends off of them, right? And you're living life, got money coming in. So you paid a little bit more for the shares. Who cares? Whatever. All right. But Microsoft, that's a very big deal. You don't, you kind of want to time it better because you're looking for growth. You want to kind of catch these low ends. And that's what these big banks are doing. They're buying down here right now. So they're buying up, buy, buy, buy. It's yelling at us to scream buy. Same thing here with the MSTR. MSTR and MSTY. Again, you put your money into MSTY because that's where you're going to get your dividends. And look at the dividends on this thing. Holy smokes, a Rooney. Let's go look at the dividends on this thing. MSTY. MSTY gives you dividends that you won't believe. Just every month they give you $1.37 a share. And right now, shares are only $20. And they give you $1.37 for every freaking share you own. You want some of that, baby? Man, you want some of that, baby. Yes, you do. You really want some of that. But it's high risk, right? Let's go over to the Pitt News Magazine calculator. Where is my Pitt News Magazine calculator? There it is. So if we come in here and we say, how much income can I earn on monthly payout if I put in $10,000, and I go calculate, and then we slide down here. There's Misty right at the top. That's the one we just looked at. MSTR is the underlying. So a yield of 151.45 monthly would be $1,262 on a $10,000 investment. Wow. Wow. That would be $15,000 annually. Now, notice the risk. Very high risk. All right. Very high risk. That market's going to go all over the place. Why? Because it's Bitcoin. Come on, guys. Bitcoin. But look at NVIDIA. NVIDIA is not Bitcoin. And it's got a yield of 121. So if you put $10,000 into NVIDIA, you can get on average $1,000 a month, $12,000 a year on a $10,000 investment. Again, it's very high. It's very risky. It's got a lot of movement in it. But, whew. So that's kind of a neat little calculator. You can also come in here and look at it the other way around too. How much do I need to invest to make, if I want, let's say I need $5,000 a month, $5,000 a month. Okay. If I want $5,000 a month, how much do I need to put in? Into Misty, I need to put $39,000. You put $39,000 into Misty, and according to the current yield, which again, remember, you're invested in Bitcoin, and it's giving you dividends against a Bitcoin company. Now, MSTR is not Bitcoin; they're a software company but their balance sheet is nothing but Bitcoin, right? So that's going to give you $5,000 a month. If you put $40,000 into MSTY. Same thing here. If you put $50,000 into NVDY, which is NVIDIA, you're going to get roughly $5,000 a month in dividends. Very high risk because the market's going to move a lot. But nonetheless, so you come down here to some of these low risks. Let's say you come down here to Apple. Apple's at the very bottom of the risk state table. I'm not going to do ExxonMobil because it's really low. But you'd have to put $225,000 into Apple, which is APLY, to get the same $5,000. $224,000 into Apple to get the same $5,000 at their rate of 26.75, which is still pretty damn good. You can't complain about 26% return on your money annualized. Wow. Okay, so you might not want to do this one, 151. Maybe you want to put a few bucks in there, maybe a little. It's kind of fun to see those big checks come in, but realize it's a little risky. But 224,000, maybe you find something, maybe I'll go halfway in between. So you could go to Disney. You have to put 100,000 in there to get $5,000 a month. Meta, that's not bad, right? Tesla, that's one I like. I like Tesla. We all love Elon Musk, blood in the street, right? So investment, put $68,000 into Elon Musk and he'll give you $5,000 back a month. That's pretty cool. He's got a high in there. But anyway, that's a neat little calculator. So let's jump back on over. And I'm working on this calculator, trying to make it bigger, better, more stuff. I'll show you some more stuff as I get it. Let's go back over to where did we get to? We got to Misty. All right, there's NVIDIA. We talked about NVIDIA. It's got a high return on it as well. And again, it's screaming and yelling at us to buy it. I mean, it's been telling us to buy it for three days, right? See that turnover right there? Look at that. That MACD went from red to green. This thing is in accumulation mode. They're saying buy. We're on the second drive down, drive 1, drive 2, off that top peak up in there. You can almost call it a 3 drive from here. Drive 1, but it went up and broke right there. I don't know if it broke it or double topped it. You could almost call that a 3 drive pattern. Drive 1, drive 2. You almost say you're sitting on, I don't want to say it, but you might be sitting on a jack and a king right there, or a jack and a 10. Nobody knows. History will tell us. All right. But we're at least sitting on a 17 if this is drive 1 and this is drive 2. Again, we don't know. We're trying to reverse engineer what the big banks are doing and thinking. Is this their 3 drive pattern? Did they accumulate once and then accumulate a second time? And then they're like, well, you know what? Let's accumulate a 3rd time. I don't know. Or did they say, well, this is the end. Let's just sell out in here. It pulled the indicator down, but they were just selling out all their final long positions. and then it starts to flush. They do a little accumulation here, drive it back up, and then they do a little bit more accumulation here, and we're in the second drive. Now they'll have to decide whether they want to push it up on the third drive or wait for the third drive, push it down, do it one more time, or whether they'll go up on the second drive. We don't know. All we can do is say, well, they're on the second drive at least. They might start driving it higher here. This is NVIDIA. They might think this is good enough, and that's about as good as it's going to get, and they're going to take their money and go. People, retail traders are what they're trying to take your money away from. So they're trying to read the retail traders. Now, are the retail traders hanging on to NVIDIA? Are the retail traders saying, let's get out of NVIDIA? Or are the retail traders saying, hey, we're going to just hang on to NVIDIA. We don't care how low it goes. We think it'll come back. NVIDIA is a really good company. We've made a lot of money on it. We're not letting go of our stock. So it doesn't matter if they drive it down another thing. They've driven everybody out who's willing to sell. So there's no reason to keep driving it down if nobody's willing to sell to them. So they'll say, all right, let's go. Let's get ourselves some shares and let's get out of this thing. Let's go. Let's rock and roll and let's make some money. And they'll start driving that thing back up again. So you never know. We'll have to wait and see. I think this is a 17. I'm going to call it a 17. We're sitting on a 17. All right. Of course, if you want to be perfectly straight up about this, instead of calling it a 17, it's an A, what is it? It's an X2S A1. And this one here is an X1S A1. So this is our X1S A1. This is X2S A1. And of course, if we go down one more, it'll be X3S A1. I like to use cards as an example, but that's the real numbers. How do you know, Lan? How do you know that's the real numbers? Well, of course, because you guys know you have my book. Go get my book. It has all of the probabilities in there. It has the probability statements. So you can learn all about the probabilities. It's stock market playbook of strategies. Search Lan H. Turner on Amazon. You have to put the H in there, or else you get Lana Turner. And although pretty, she's not going to teach you how to trade. All right. Just Lan H. Turner, not Lana Turner. And you can get my book. It's 238 pages of all kinds of wonderful strategies that I teach you here in this class. It's the manual to the class. It's the workbook. So go pick that up so that you can have the workbook and you can set that out on your desk, and you can see what these X1S A1s, what all these probabilities are, because that's what it is when we trade, right? It's all about the probabilities. You want to know what the probabilities are. All right, let's see if we can get me down out of the way again. How did I do that before? There we go. All right, so let's go to the next one. That is NVIDIA, and it's a buy. Not back the truck up. I mean, you don't ever back the truck up and hit the dumper on a 17 or on an X2S A1. You do that on X3S A1. But right now it's just like, well, we'll open the trunk of the car. All right. X1S A1, keep the doors locked. You don't want to go in on X1S A1. They fail way too often. Doesn't mean they can't go. They certainly can. And sometimes they do, but it's really rare. You're playing with a pair of twos, and you're lucky if you can make anything out of a pair of twos. There's always going to be somebody that's going to beat you with a pair of twos. All right. Okay, NVIDIA. This is the underlying, and NVDY. This is actually the dividend version. So we're going to buy this one when we want to get into this one. Does that make sense? This is the one you're going to actually put your money in, because this is going to give you the dividends. And that's the high dividends. So when this one is at a buy, X2SA1, you're like, oh, I think I'll put a little bit of money in there. Well, you don't put it into NVDA. You put it into NVDY. Put it into NVDY, and then it will play this, you play the trends of NVDA, but you're making your money in NVDY. And that's where you're going to get your dividends. And once you put your money in, don't sell it. I don't care what you paid for those shares. You don't sell them. Let's keep them for at least a year. All right. No long-term, no short-term taxes on these things. You don't want to deal with that. Of course, if you're in a tax account, you do what you want. All right. Do what you want. NVDA. This is the one we analyze. We put our money into this one. Now, if you get a big dividend out of NVDY, which is going to come to you every month, right? You can use that dividend to go into NVDA. That's where you buy NVDA, is with the dividends from NVDY. But you get into NVDY based on the movement of NVDA. So if we're at X2SA1, you want to put some money in, that's not a bad time to put some money in. So you put some money in, but you don't put it into this market. You put it into this one, get the dividends. Then when the dividends come to you, you put them into that market, you get some growth out of it. All right. So you play both sides. It's fun. It's a fun way to do it. All right. Let's go look at PLTR. This is Palantir. Now, Palantir actually has a dividend version too. What is it? PLT. I think it's PLTY. PLTY. But yield max. There it is. So that's the PLTY version. So if you want to go into Palantir, which is a great company, and I love Palantir, and I think that you're gonna see a lot of growth out of Palantir. You might want to if you put your money into Palantir, put it into PLTY, get your dividends, and then take those dividends and put those dividends into PLTR, which is the growth, right? No dividends over here in PLTR. But you can put this in, because I think we're going to see a lot of growth out of PLTR. PLTR is a big company in the government, and they help balance budgets. I mean, that's what they do. Plus, they're big military contractors with AI software that helps these guys balance their budgets. And isn't that what everything's going on over there? And they're friends with Elon. The guys are friends with Elon and President Trump's family, and they're kind of on the inside circle. And they've been making a lot of waves lately, doing really well. And so I would say that it would be okay. I think you should put some money into PLTR. And then, of course, put it into PLTY to get your dividends, then take the dividends and put it into PLTR. Get some growth out of that thing, because I think you might get some decent growth out of it. So that would be a good way to do it. And it's on a buy right now. We have to look at this. This looks like I don't know how far back. The thing didn't have a reset till right here. These red bars are our reset. I mean, look at this. This is accumulation, big accumulation here. Look, it's saying buy right there. This is going red to green. I don't know. This is one of those stocks that I don't think, even if the S&P flushes by, well, you have to take into consideration they just put it into the S&P. So if the S&P flushes and all the other stocks go down and people start selling out the S&P, they're going to be selling out their Palantir. But I think a lot of people buy Palantir on its own because it's one of those meme stocks. It's actually got a lot of, and it's getting another reset right here. I mean, just look at this thing. You just want to sell the barn, man. You want to sell all the cows. You want to sell all. I mean, you can take the tractor to the put the tractor up for sale, man. I mean, you look at this market and you're just like, I just want to sell everything and put it in here. But we got to be cautious. Be careful. Don't go all in. We never want to go all in. Don't go all in. We don't push all of our chips on the table at once. But you want to with this one. You really do. Nice little 3-drive pattern coming in here. And who knows? You got 2 resets in here. So beautiful. Everything is just such a beautiful setup for Palantir. You just want to sell the cow, sell the milk cow, man. Put it in here. I don't know. It's in that S&P 500, and the S&P is saying I got some more downside potential for you, Lan. We got some more downside potential. Lan, you're looking at that. Isn't that just an X1SA1? X1SA1? And you said not to put any money in on X1SA1. I know I did. And yeah, that's what that is. But it could also be a 3-drive pattern. This could be a it could just be a C. It could just be a C1. It could just be a C1. Might not be an X1. I don't know. It could be a C1. You know what? If we call that a reset, it could actually be a B1. It could be a B1. The only thing that, it could be any of these things, because this market is so whacked out. It's so difficult to tell because we don't know what all this crap going on in here is. We've had so much messing around in here. This was a reset. I'd call that a drive 1. That would mean this would be the pullback going into drive 2. That would be make that a B1. But if we count this drive here, and that's not a reset, drive 1, drive 2, we're still at a C1. But if we come all the way back here, because this thing is a drive 1, this is a drive 2, this is a drive 3, which is what it looks like, right? This is the reset. Well, then it's an X1SA1. And we get a little pop and another drop, a pop and drop. All right. And then that ends up being an ABC top formation. So it's because of those red bars right there that jacked us all up. If we didn't have those red bars, it would be way more clear that that's a 3-drive pattern. But where we got that 3-drive, that pullback right there into those red bars, It's almost like a reset. And we got another reset right here, another set of red bars. It's so tough to know what to do. Everything's giving us buy signals in here. But it's an X1 SA1. Could very well be a pair of twos. What are we going to do? We could put a little bit of money into PLTY right now. We could put a little bit of money into PLTY and at least start getting some dividends and putting that into save those dividends in your cash account and get ready to put them into PLTR. If this thing goes up, you don't have to catch the exact bottom. If it goes up and makes a little ABC pattern and starts to break and you get a buy signal right here, nothing wrong with buying right there. All right, you get a little ABC pattern off that bottom and the rally. That would be your A2, right? A2, or maybe depending on how it breaks those blue lights, might be a B1. We'll have to wait and see. We don't know, but I think that putting some money into PLTY to get some dividends out of this is not a bad move. All right. Snowy. This is another good one. Snow is the company under an underbrand, so we have to go to SNOW. Snow. Snowflake. Big software company. Snowflake. Now, this one here, I would be saying put some money into it if we didn't have the S&P sitting at that with that big looming downtrend ahead of us. Because this is a good buy point right here, right? We generally would want to come in here and sell some. If we were going to get into the snow, we'd want to come in and buy some options, right? Actually sell some options and maybe pick up some positions in here. The blue light is still a long ways away. It's still got a little bit of a, we got some, the blue light's got to intercept down in here somewhere. It's got to come down. It'll meet it if it keeps going up. But you got the accumulation in here, which is good. You got the MACD hasn't turned green yet, but probably today or tomorrow if that market rallies a little bit. But I don't really want to call this one bar break right here. This is one big drive down. It's just your little ABC in the middle there, like this, A, B, C. And we're down at 130.9. So that's still one drive, in my opinion. That's one drive down. But it's right there, dead center of our Fibonacci. I just use the Donchian channels because I'm lazy. I like to always draw the ruler in there, but I do it anyway. I don't know. Anyway, there you go. That's the Delta Kona probability. It's dead center of the Delta Kona, one standard deviation. So is that a buy signal? Absolutely. That's a buy signal, but it's an X1 SA1. I mean, it's a pair of twos. With that little break in there, it almost feels like it's not a pair of twos. Maybe it's I don't want to call it a 17. Maybe it's 2 sevens. All right, it's a 14. We're going to hit on a 14. So you could go put some money in that. Let's put some money into Snowy, SNOY, and we'll put a little bit of money in here, start collecting some dividends, realizing that, everything says buy here, and that might be a good buy, and we might be happy we did it. But it could go down a little bit more, but that's okay. We're going to get some dividends that's going to help cover our losses if it does. And it's not really losses. It's just that we paid a little bit more for the shares, and that's okay. I like to call them tokens. Kind of takes that share price thing away from it, makes it less of a stock market thing and makes it more of a concept of what's going on here, because this is really the options that are being traded over here on the SNOW. But that's it. Put a little bit of money in Snowy. I don't think you'll be sad that you did. All right. SVOL. I'm not trading SVOL, not recommending you guys do, but I know we got some guys in the class who did because I used to trade it, and I think some of you stuck with it, even though I got out. This thing, you know what? Remember when we thought this was terrible? We thought, wow, holy cow, I've never seen anything like that before. Wow, oh my gosh, look at these things. Oh, this is terrible. Look at this. Whoa, that is like unbelievable. So could it rebound and come back up? Yeah, if things start to calm down, that's what we're looking at, right? This is the SVOL is it's just the upside down. It's a volatility. VIX. It's just VIX turned upside down. VIX goes this way. SVOL goes this way. So it's just the upside down SVOL. and or upside down VIX. And so, yeah, if things start to calm down, it looks like things are starting to calm down, and it'll go. You could buy that and woo, make a lot of money on the way back up, and it pays good dividends. So, this and definitely S-ball. Put some money in S-ball if you want to. I mean, dividends is good. Good is relative. I think it's what 16% or something. So Tesla, that's the big baby right there. There she blows. Wow, wow, wow. Look at that baby go. Look at that beautiful little shelf right in there. Didn't break the blue lights. Technically speaking, I mean, this thing is 200% projection right there. It came down all the way down. Wow, 130.9 is usually where it goes. This is the blood in the street. Anything after 130.9, that's a bloody mess. You got a bloody nose. Look at that big red bloody nose. Somebody gave Elon a bloody nose. That's why I'm saying this is an opportunity, I think, to put a little bit of money into Tesla. Could it go lower? Yeah. Yeah, they're beating him up pretty bad. They're beating him up pretty bad. But if you notice, it's just back here to where he was. It's back here where he was. It's not too bad. It's just back here where he was. It's just back here. Everybody was happy with Tesla in here. If you had your dividends, they're making money. That's what we really want to see. Let's go with that. Let go of that one. You really want to see the market just kind of go sideways and you make your dividends. But, we're right back where we were. Just take old Elon right back to where he was. Does that scare you? No, you weren't scared back here. Why are you scared here? Because he might go down some more. Yeah, he could. He could bounce here, break those blue lights, and go one more. Because this is a 3-drive pattern. Drive 1, drive 2, break, drive 3. This is, technically speaking, you got to call it what it is. This is an X2S A1. X2S A1. And an X2S A1, that's kind of like holding the 17. But look at down here. This has all been accumulation here. I think the big boys are just happy to be buying this stuff up. They know Elon's got a good company. And then look at this. This has already gone green. So it's red, 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 red. Now it's green, 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 green. Green means go. Buy, buy, buy. Of course, we don't want to put it into TSLA, right? If we're going to buy it, we're going to put it into TSLY. And TSLY, not that it's as important as TSLA, but it does have a 3-drive pattern. It did crack and break right there. Whoop, and right there. So over here on TSLY, which again, secondary to TSLA, this is an X3S A1. And we all know what an X3S A1 is. X3S A1. That's a king and a jack. That's a king and a jack right there. That makes you want to sell the barn, sell the cow. Right there. Look at right here. This thing, same green, 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 green. Accumulate, accumulate. They've been buying, buying, buying all the way down this whole thing. Now they want to start turning this thing around and start to sell to everybody. Start to rally that out, get all the retail traders to start to buy. So if you load it up like all these guys did, they've been buying this whole trip down, goes across here a little bit. They'll probably do some ugly little thing like this. Just be ready for that. And then they'll pop it and you'll get some pattern like this. And they'll pop it right there. And then all the retail traders will start buying. And guess who's going to sell to them? All the people who bought all these, which is BlackRock, Vanguard, and State Street. They're going to buy like mad down through here. They're buying up all this stuff in here. Then they'll pop it like that and give us a little buy signal, which is what we retail traders want to see. And we buy that and we start buying all the way up that trend and they sell out all the way up that trend. And then they make all the money. And then we get to the top and we're loaded up and we got an upside down pyramid again. There you go. That's the game they play. It's just how much are they going to beat up Elon before they go and make a whole bunch of money off of us? They're giving Elon a spanking right now. That's all they're doing. Okay, here's YMAG. We already looked at YMAG. This is the underlying of the MAG. YMAG, and they got MAGE. That's this one here, MAGs. So we already talked about this one. If you're going to get into the Magnificent Seven, MAGs, this is the growth. Go ahead and get into YMAG right here. And it's down here, beaten up. It's it's ripe to be a picking. If it wasn't for that darn long-term S&P chart, I'd be like selling. I wouldn't sell my wife. Darn close. I'd sell my ex-wife. All right, there we go. There's ex-wife. There's YMAG, YMAX, and YMAG. Those are two really good stocks. And YMAG is the Magnificent Seven, and that's where you're going to put your money so that you can get the dividends, so that you can take the dividends and put them into YMAG and get some growth. That's what you want to do. All right, that's it. Let's go over and see how our portfolio is doing. All right. Anybody have any questions? Do you have any stocks right now that you'd like me to go look at? If somebody wants to throw up a stock onto the into the window, we'll go look at that before we go. Anybody got a stock you want me to go look at? Are you ready to go put our money into our account? My UBUTU. There we go. All right, here it comes. There it is. On the wrong screen. Let's bring it over to this screen. Here we go. All right. There is our portfolio. So this is our UBI portfolio. Let's go update it. So first thing we want to do is see what YMAG's been doing for us. We got $50,000 in YMAG. We've received $2,708 so far. Remaining seed money, they got to give us $47,000 back before we have 100% of our money back that we've given them. And that's estimated to take 2.85 years. That's not bad. And in Tesla, now we have some money in Tesla, 54,000. So far, they've given us 4,500 back. And our gravy train doesn't start for another 49,000, which our payback years left is 1.18 years or 14 months. 14 months, they will have given us our full $54,000 back. Then we're on the gravy train. That will become a cash cow, unless we put more money into it. If we put more money into it, then we'll extend that time back, but that's okay. We'll make more money. All right. And then we also have MSFO. We put a little bit into Microsoft, $500, and it gave us $20. We have Misty, the big bad daddy of them all. 56,000 is what we have in there, and it's given us 7,000 back so far. And we have payback years left, 0.68 or 8 months until they've given us our full 56,000 back. Now we have to update some of these dividends and most recent dividends, because the dividends have been going down because the markets have been going down. So you have to realize that the dividends have been going down, and so the market's been going down. Oh, look at Jay in there with the. Oh, John's got one in there. Coney. Didn't we look at Coney? Did we skip Coney, John? Jay's got Wolf in there. Before we fill in these, let's go look at these stocks that these guys are pulling up. Let's go look at some. Where's my. Wait a second. Where did my software go? Lost it. There it is. All right. I thought we looked at Coney because Coney's one of our. I guess we didn't look at Coney. I guess we looked at Coney. Yeah, we did look at Coney. John, I think we looked at Coney. This is the big, beautiful 3-drive pattern down. So we already looked at Coney. And Coin, that was the first one we looked at. So that's the ABC pattern. We're down at the bottom. It's a buy signal, I will say. I'll tell you, John, if you want to put money in there, put it into Coney. And I don't think you'll be too sad. It doesn't mean that there's not a third drive down available. I mean, this is the second drive, so it is what it is. This is X2SA1. So you're sitting on a 17 right now. And I'd put my money into CONY and then take the dividends and put it into COIN if you wanted to go for the growth side. Or just take the dividends and go spend them. Who cares? Who cares? It's just money. It's just money. All right. Well, you do with it what you want. It's your money. Wolfie. What is Wolf? What is Wolf? Terra Wolf. Oh. Hey, Jay. Wolfie. Wolf. Do they give dividends? We have to go over to here to see. Wolf. Wolf, 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 wolf. Woof, woof, wolf. Nope, no dividends. They're not a dividend paying stock, but they are. Oh, they're a penny stock. Playing the penny stocks, are you? Capital markets, financial capital markets, wolf, Terra Wolf. They've been beat up. They're in that's a 3-drive pattern down. Look at that, 3 drives. I would call that drive 1, drive 2, drive 3. You got drive 1, drive 2, drive 3. You got green, green, green. Buy, buy, buy. I don't think you'd be sad if you started to pick up a little Terra Wolf right now. You're sitting on a jack and a 10. We're at the very bottom of the pullback on this one. The only thing that scares me on these things, well, this is a penny stock. And so you have to take into consideration that there's not a lot of great big boys that like to play these. You're going to get some smaller hedge funds and some smaller banks, smaller speculative hedge funds that are going to play this. But I doubt you're going to get a lot of movement out of BlackRock and Vanguard and State Street. But these guys, the smaller guys, play the same game. The smaller hedge funds, they play the same exact game. They accumulate. They go through an accumulation stage as these markets come down, and then they sell out as they try to get the retail traders to buy. So you're going to have to see some pump news, some pump and dump news. They're going to pump you here coming up pretty soon. I'll bet you'll start hearing. If you got your ear to the ground on Terra Wolf, I think you're going to start hearing some buy news. Oh, Terra Wolf is all this great. Oh, you're going to buy, and you're going to get some buy news coming out, because I think they've got their 3-drive pattern down there, going through their accumulation stage, and I think they're going to want to get this market to pop. They may go a little bit. They may do that little thing in here for a little bit. It may get a little bit of this, sideways stuff, because that's what they like to do. They like to go through a little accumulation stage in here. And then they like to get that pattern so they can pop it and get you a nice entry point over here. And they might pop it right here. I don't know. It depends on how anxious they are to get started. It looks right here like they've got a little anxiousness happening, but it's a little sideways right in here. We don't know. They're going to break it right in here. We'll see what happens. And then they'll break it, give you all kinds of great news about Terra Wolf. So watch for that. And then you're going to see this thing start to go. And then they're going to start selling all their positions out to the retail traders who are buying on the way up. Just don't build yourself an upside down pyramid, because they'll drive it up and then they'll flush it and they'll take all your money. And that's how they do it, right? Just be mindful. You can buy, but be ready to get out, because they're going to flush it back down. They want you to build that upside down pyramid. And they want you to get all of your shares build up in here, so that all they have to do is flush it that far and you're underwater. So be careful. But that's what's probably going to happen with Terra Wolf. You keep that on top of mind for us, and let me know how that turns out for you, because I'm probably not going to focus on this one, because I'm not really into the penny stock stuff. But Jay, do that for me, okay? Let's keep in touch on this one if you're going to watch it. Put a little bit of money in it and see if it won't go up through this trend, but don't get upside down on your pyramid. If you do, make sure you sell out before they dump it on you. Take your profits. This is going to be a trade. I don't know, Terra Wolf. I don't know anything about them. I don't know if it's a long-term investment and it's something you're like, I'm going to hang on to this thing until the day I die. I'm going to give it to my kids. I don't know. I don't know that much about Terra Wolf. We have to go over and do some research, but it's definitely at the bottom of a 3-drive pattern, ready to get popped. If they can pop it, I don't know. We'll have to wait and see, because again, we got all that downside pressure from the S&P. Who knows? All right, let's get back to what we were doing. Let's get back over here. All right, what we're going to do is we're going to go over and see how much money we've got coming in on YMAG, and we're going to enter in our portfolio. Now we have to do some math, because this is just a demo. If we had the real market, then of course your brokerage firm tells you the numbers, but we have to do the math. So let's go do YMAG first. When was the last time? Well, I got to come over to here. YMAG. What did we? I think there might have been a little bit that we're going to have to maybe do a couple. When was the last time? That's March 13th. Let's get this one down. Got to bring this one up. When was the last time we put anything in? It was on the 27th. So last time we put any money in was on the 27th. Let's go back to the 27th. When was that one? March 6th. Oh, look at that. There, we've got 2 of them we get to put in. So March 6th, we got 151. So bring up our calculator. How many shares do we have? 0.151. We got 15 cents times how many shares? Oh, wait, what was the date? March 6th. Okay. March 03 06 2025. And we have how many shares of this YMAG stuff? We have 2,630 times 2,630.19 equals. We got $397. Now that's the part that your broker will just tell you. You don't have to calculate that. But we don't. We have to do it ourselves. 39715. 39715. All right. So that gets added in automatically up onto the table. It won't get in automatically over here. Well, it might. I might have already had it, but we'll see. That's the February. We've got to go into March. Okay, so we got one more. We got to do one more over here. Let's go see what that one was. Here, it's March 13th for 14.5. 14.5. Oh, not 14. It's 0.145. That would have been a nice dividend, $14 per share. Okay, March 13th. So we're going to go in here, 3/13/2025. Because remember, YMAG pays us every week. So we get every Friday, we get a check from YMAG. And last Friday it was $3.97. And this past Friday, it was 14.5 times 2630. 2630.19. Should be very close, but $381.37. That's better than a stick in the eye. So that's good. So now that's 2. We got 2 for March. So we got to come over here. And for March, YMAG, my spreadsheet's starting to get a little bit too small here. I need to get my bigger monitor. So we're going to go equals these 2. All right. There we go. 397. Wait a second. How come that did that? Funny thing. That's not right. What happened? I don't want that. I just want these 2. Equals. Is that going to do that again? Why is it doing that? I don't want that there. What the heck is going on? Excel? That almost seems like a bug to me. I don't know why I would be doing that. Maybe I have to do it like this. The sum of these 2. Is that better? Okay, it likes that better. All right, we'll do it your way. Okay, there we go. We just made $778 so far this month in YMAG. We still got 2 more Fridays to go. So it should double that. Probably around $1,400. That wouldn't be a bad stick in the eye. Okay, YMAX. Let's go to YMAX. Oh, we don't have any YMAX. You know what? Why have we got these out of order? We should put those all in order. That would be nicer. If we come in here and we can grab that and we'll just bring that up. Oh, like this. Does that help? It does. I like that better, don't you? We'll just put all the ones we got money in up here to the top. We'll do one more. Uh-oh. I don't know. That one might mess up. Because that one's got a line under it. Oh, no, it worked. Then we're going to put this line here. We can make that fancy. Yeah, just like that. February 19th, added it to Tesla. We took $4,539 on February 19th and added it to Tesla. I made that note because I wasn't exactly sure how I was supposed to. I can't remember why I put that in there. I think that was some of our profits. I don't know. I remember what we did there. Anyway, we got March, YMAG. Next one we're going to do is Tesla. Let's go see if Tesla gave us any money. Tesla, I don't think so. Last one was 224. TSLY. 224 is this one. 220. Oh, this says 220. 220. Tesla 220. That's 220. Now that makes me wonder if I did the math right, if I had the wrong date. 220. 579. So we're going to do it over, okay? 0.579. Oh, clear that. 0.579 times the number of shares. The number of shares we have in Tesla are 3,531. 3,531.07. Remember, they pay you your dividends based on the number of shares you have, not how much you paid for them. 2044. Oh, so we did the math right. So that's correct. Correctamundo. Okay, let's go see if we got one on Microsoft gave us any money. MSFO. Where's MSFO? Right here. 2.6 was the last time. MSFO. 2.6. This one is 3.6. Ha ha ha. 0.285 times. How many shares do we have on March 6th? So we got 3.6. 3.6. 3.6, 2025. And oh, how come that didn't center? Okay, now 285 times UBI 1018. How many shares do we have of MSFO? MSFO. Oh, we don't have very many. 28 shares times 28.13 shares. 8. Our dividends went down. $8.01. $8.01. All right, let's do the next one. Microsoft. This one here is Misty. Did we get paid on Misty? That's the question. Misty, day 19. We should have got paid. Oh, wait, today's the 17th. Let's go see if they paid us yet. Misty. MSTY. Oh, they did. We're going to get a check here. 1.379. 1.379. How many shares do we have on March 13th? MSTY. Where's MSTY? Oh, now I forgot the date. March 13th. 03/13/2025. And we got $1.37 per share times how many shares? We have 1,936 shares, 0.53 shares. Equals 2,000. That's not as good as last time. 2,670. That's what happens when the market goes down. You don't get paid as much. Well, we went from 3,900 to 2,600. Wow, it dropped $1,000 on us this month. Bitcoin. Bitcoin went down a lot. Our dividends went down a lot too. So it is what it is. MSTY. We haven't got paid on Tesla yet. So let's see. Let's update. We brought our YMAG in for March. Tesla, we didn't get paid on yet. So that actually should go down underneath. MSFO, we got paid on. MSFO. So we got to go auto sum. Actually, we're just going to go equals. And over here for Misty, we're going to go equals this one. So far this month, we got $3,457, and we still have Tesla to pay out. And Tesla actually is the last one to pay out. So we're going to bring it down like that. Okay. All right. So all of our dividends have gone down a little bit because of YMAG really well. YMAG, we've only been paid 2 out of the 4, so you can't say it went down. We don't know. 774. It sure looks like it's about on track. Tesla 2,500, 2,000. I'm sure we're not going to get the full 2,000 out of Tesla this time because it just kept falling. Well, we'll see what it is. It comes in. What did it say? Tesla comes in when? Let's go look again. TSLY. Tesla dividends come in, well, around the 20th, and today's the 17th. So we got 3 days. We'll know on Wednesday, maybe, how much we're going to get. I'm waiting for Tesla on my real money account, too. All right, there we go. We got a little money. So far, $3,400 this month on our $161,000 investment, but we got more to come. All right, that's it, guys. That's the name of the game. That's our portfolio. And hopefully you could see that. I was probably in the way for part of that, wasn't I? Not too bad, I guess. All right, if you would like to have this spreadsheet and you would like to trade like this, all you have to do to get this spreadsheet is be a subscriber to Pitt News Magazine. Let me tell you a little bit about Pitt News Magazine. In fact, I'm tired of talking. Let's let Claire tell you about Pitt News Magazine today. How's that?
Hey everyone, it's Claire here. Are you ready to take your trading knowledge to the next level? Welcome to Pitt News Magazine, your trusted source for trading intelligence. Whether you're a seasoned trader or just starting out, this magazine delivers the insights you need to stay ahead of the market. Featuring articles from experts like Dr. Scott Brown, Aidan Gray, myself, and of course Mr. Lan Turner. Pitt News brings you exclusive strategies, deep dives into market psychology, and powerful trading techniques. Find out about the exponential power of growth, seasonal trading secrets, and even Lan's latest wild eye, crazy eye iron butterfly strategy. Each issue is packed with expert trading strategies, top stock picks, key seasonal trading insights, and comprehensive analysis of commodity futures and ETFs. You'll also find tips on technical analysis, option strategies, and much more. No matter your trading interests, we've got you covered. And the best part? You can learn your way. Listen to each recorded article, read the full in-depth lessons, or watch our video breakdowns. It's trading education on your terms. Right now, we're offering a special deal. Get your first full year of Pitt News for only $19.97. That's 50% off the regular price. 12 issues of powerful trading insights, backed by our 100% satisfaction guarantee. So, don't miss out on this limited time offer. Head to pittnews.com and subscribe today. Empower yourself, enrich your trading strategies, and stay informed with Pitt News Magazine. Trading intelligence right at your fingertips. Okay, let's get back to Mr. Turner. Thanks for sticking with me.
All right, if you would like to get this spreadsheet, then it comes with your subscription to Pitt News Magazine. That's how you can get this spreadsheet. And of course, it's got a lot of other stuff in here too. So you can play with about 7 or 8 different spreadsheets. All right, I got a Sunday school lesson for you, and then we'll let you go. All right, here's your Sunday school lesson. Let me see. Let me put me up here. All right, life rules to live by. In this dog-eat-dog world, which dog do you intend to be? Pretty good question, right? In this dog-eat-dog world, which dog do you intend to be? All right, be the bulldog, grab on, and don't let go. And that's my Sunday school lesson for today, guys. We will catch you tomorrow afternoon for Power Hour. And for those of you who are local, come on down to the university, 2nd floor, Udvar Hazy Building, room, I think it's 204. And join us for the options class. We'll see you there. Bye-bye.